Hey everybody, welcome to Condors, Calendars, and Butterflies. My name is Brent Moores, and it's Friday, everybody, and glad you're joining me. And if you're watching on recording, we're glad you're here too. I see some familiar names in the chat. I'm joined alongside James Boyd, who's helping me out in the chat. I appreciate James, of course. And make sure you check out his Investing Master Series. That occurs every Tuesday, 11 o'clock Eastern Time. And make sure you subscribe to the Trader Talks channel as well, so you can get additional content, we have a whole bunch of different webcasts here. And let's see, what else? Follow us on X, at BrentMooreCS, at JamesBoydCX for additional content throughout the week. Today, what are we talking about? We're going to talk about searching, finding bullish stock option trade potential, potential option trades there. So that's the goal today. We're gonna go pretty basic on this, and we'll try and come up with some good example trades here for you. But remember, options do carry a high level of risk and are not suitable for all investors. And the material today is intended for educational, informational purposes only. It's not an individual recommendation or personalized investment advice. And short options can be assigned at any time after expiration, regardless of the in-the-money amount. And the paper money software application is for educational purposes only. In fact, one of the things with that paper money software application is it doesn't assign short options early. So that's a difference between that and your real account. Rolling strategies can entail additional transaction costs. All investing involves risks, including loss of principal. There's no guarantee that execution of a stop order will be at or near the stop price. Past performance is no guarantee of future results. And Schwab does not recommend the use of technical analysis as the sole means of investment research. Okay, all right, everybody. Let's head on over to the Thinkorswim platform. Just see the market's down a little bit today, down about 0.7% on the S&P 500. This is, it's been kind of in the channel. We had a nice uptrend, but it's been kind of going sideways more. It seems like this would be kind of a key level down here, around the 6,800 level on the SPX. Around the 7,000 level would be another pretty key level. How long are we going to stay in the range? I don't know. But when we're looking for individual options and when we're trading options, it typically starts with the underlying stock. We want things like a liquid stock. We want stocks that we think are going to, if we're doing a bullish option trade, go up, or of course, vice versa, if we're doing a bearish option trade. But how do we decide where the stock's going to go? Well, there's different approaches. For example, some people use fundamental analysis. Not as often, though, with shorter term option trades. With longer term investments, yes. Shorter term options trades, probably not as common to use fundamental analysis there. There's other approaches, and one approach that we use quite often in this class, in this webcast, is we use probability analysis. We look at the probability of that option expiring in the money or out of the money or things like that. Or we look at just the probabilities of the trade of being at break even or better. That's probability analysis. And there's another way that we can do it, and that's a very common way, and that's technical analysis. And that's what I want to focus on today, technical analysis. It's kind of a key level, key thing to look at when we're doing option trades. So when we talk about technical analysis, though, I want to be very straightforward on this in terms of what we're looking for, because there's a lot of things you can look for technically on a stock. When I say technically, I mean using technical analysis. But I think most technicians, I can't speak for all technicians, but most technicians would probably identify trend as a key concept here if we're looking for stocks. If we're looking for bearish or stocks for option trades. If we're looking for bearish option trades, we look for something in a downtrend. Bullish options trade, likely something more with an upward trend. So trend, we're going to call that number one, the trend. Okay. Number two, I would say another thing that most technicians probably consider to look at, and I'm not going to write it all out, I'm just going to put S and R here, is support and resistance. We're going to kind of consider support and resistance levels on the stock. Another key level of technical analysis, key item of technical analysis. Number 3, I'm going to call it momentum. Okay, momentum. What's the current momentum of the stock? Is it going up? Is it going down? And I don't mean going up for the longer trend. I mean, right now, is it going up or going down? The last couple days, is it going up or going down? That's shorter term. But looking at these, those are kind of the 3 items that we're going to start out with. Now, one approach to doing this is just scrolling through a list of stocks that maybe is bullish or bearish, or just a plain list of stocks that maybe it's screened for things like liquidity. I have a watch list here, liquid stocks. We've gone through this in this webcast in the past. And you can go through and you can go, well, I'm looking for a bullish stock, and I'm just going to scroll through these. And I can say, well, Apple's not very bullish right now, probably. I'm going to skip that. Let's go to AMD. Well, not that bullish right now, probably. Or Amazon, and just kind of go on down the list, and eventually you'll find something. And that's fine. There's nothing wrong with that. And it's an approach I often use when I'm looking for trades. Now, if you're interested, this is just a list of S&P 100 stocks or 500 stocks that are penny increment options that are trading at least, I don't remember exactly, 8 or 10 million shares a day. Okay. If you want this was created as a scan. I put it in the description of this webcast. You can use that scan here. Okay. Now, why a scan? This isn't a scan. This is a watch list, Brent. Well, if you create a scan on the Thinkorswim desktop software and you save it, it then becomes a watch list for you. Okay. Then you can look for it in your personal watch list. That's the process we're going to do. We're going to create a scan and we're going to save it to the watch list. We're going to save it and then it becomes a watch list. So this is kind of just like anything, bullish, bearish, neutral, this one. But what we can do is we can kind of try and save ourselves a little bit, and we can try and create a bullish scan. And that's exactly what I did. I created a bullish scan, and I'm going to share it with you. And I'll share you the link with you as well. But I want to show you the scan. What we're going to do is, here's the scan. I'm going to kind of discuss it. I'm not going to create it from scratch with you right now. I have it right here. And if it is something that you're interested in, what I'm going to do is I'm going to put a link to the scan into the chat. I just did so. If you're watching on a recording, it's in the description of this webcast. Okay, it's the bullish scan that's in the description of this webcast. You take the scan, and if you want to import it, you take the link I gave you, or you find in the description. You go up to the gear, you click on Open Shared Item, you paste it right there, copy and paste right there. Click on Preview. You can probably name it and then import it. And then it'll be a scan. And once it's a scan, it will be in your watch list. Now, caveat, okay? Little heads up here. This scan uses study filters. Study filters don't work in paper money. This scan is not going to work in your paper money. It will work in your live platform though. Okay. So just if you're wondering why it's not working, that's probably why it's not working for you. Is I have study filters in here that don't work in the paper money platform. But our process is we're going to do that, and then we can look at the stock results either at the bottom of the scan page. Click on scan. It should come up. It came up with results. You can do that, but then it kind of is a pain in the behind because you end up like going, okay, COP, and then clicking over to charts and looking at it, and then CVS and clicking on the charts, or we can just look at it on the watch list. I'll show you that in just a minute. But for now, let's talk about this scan. I mentioned liquid stocks. We want the underlying stock to be liquid. So I don't care if the stock is bullish or not to start. If it's not a liquid stock with liquid options, it's probably not going to be appropriate for options trading. So I have a few things in here. One, I'm starting off with the S&P 500 stocks. Okay. I also am looking at penny increment options. Okay. If some options out there, if you look at option chains carefully, you'll see the option will be like $1.10, and then there'll be $1.15, and then the next price it could move to is $1.20. There's no $1.17 or anything in there. Okay. So penny increment options just means they can move 1 penny at a time. Those options that move 1 penny increment at a time tend to be more liquid options. When I'm looking for liquid stocks, this is one that I almost always use. Okay, I can't say always, but almost always I add that parameter in there. Okay. Now that doesn't tell us anything about bullish, and even with this list, S&P 500, penny increment options, you're still going to have some stocks that are a little bit borderline maybe. So I threw in a study filter for average volume, that the average volume is at least 8 million shares a day. Okay, at least 8 million shares a day. 8 million may sound like a lot. It's really not in the current market with as much liquidity as we have in the market. There's a lot of stocks that will fit the bill there. Now, to this point, we haven't said anything about bullish. Nothing about bullish. We haven't said anything about trend. We haven't said anything about momentum. And ultimately, we want to look at support and resistance. In this case, this scan is going to be looking for things such as, I mentioned, liquidity. It's going to be looking for things like trend, and it's going to be looking for things like momentum. Now, you'll notice I also mentioned support and resistance there when I was first talking about scans or technical analysis. I'm not including anything about support and resistance in here because, frankly, I haven't found a great way to scan for support and resistance levels. So they're easy enough to visually look for once we're done with that. Okay, so that's what our focus is going to be right now. So we talked about that. This. I have one where the ADX is greater than 20. ADX is just a trend indicator. Okay. This isn't bullish or bearish. It could be trending down or trending up. This isn't like a real strong level. I put 20. 20 is not very high, but it's just trying to weed out the ones that are just kind of range bound stocks that just aren't going anywhere. Okay. So it's not super rigorous here. I just put ADX greater than 20. If you want, after you have this scan and you do it, play around with it. Try making it 25 or more. A lot of times people will say 25 is a level where something's trending very strongly. Well, I don't need anything to be trending too strongly. I just don't want it to be range bound sideways. Okay. Next item. What I'm saying is I want the stock, the 20-day moving average, and I'm just using a simple moving average here, 20-day simple moving average, to be the stock closed, the last price is at least 1%. I just want it to be above the 20-day moving average. If you want to change this and use this something like an exponential moving average, you can do that. You just change this right here. You can just click right on it and change it. Okay. And then once you make a change, you can resave the scan so it fits your parameters there. Okay. Next item. Okay. Next item. I say, I'm going to go a little bit out of order. Price change. I'm going to say the closing price is at least, I just said 4% greater than it was 20 bars ago. Okay. Again, you can tweak these levels here. 4% isn't a ton, but it does tend to indicate this is giving us bullish. Okay. We knew the trend. ADX is just getting a trend. This stock above the 20-day moving average, and the stock is at least 4% greater than it was 20 bars ago, is getting at the trend going up. That's what we want. Now, momentum. Okay. Now, momentum. What about momentum? Well, I have first of all, I have the stock, the closing price of the stock has increased over the last 2 bars, okay? Last 2 days is what we're looking at, because we're looking at day. We're gonna be looking at days here. Last two bars. So in other words, it's not going down right now. And I have another custom one in here where the MACD is sloping upward. Upward slope on the MACD. In the chat, Wiley said, hey, you can look at the RSI. You can look at the RSI, okay? RSI can be used to, one, get a general idea of trend. Instead, you could probably substitute that for ADX in that regard. Something with a high RSI would work. Or you could also look at an increasing RSI, which would essentially give us probably pretty much the same thing as an increasing MACD histogram. All right, so that's the scan right there. That's the scan. Now, as I mentioned, if you wanted to, take a screenshot or something, you could do that, or I shared it with you too. Now, when I go here, and let me just pull up, and this is why. Let me get rid of this. I'm going to go to this. This is my scan. Okay, I just label it bullish options. Before I was saying, well, you don't have to click back and forth. If they're linked, it makes it very easy. You just click on them. Okay, you just click on the results, and they come up here. Okay, now. Maybe you look at them and you go, I don't like those results. I want to play with the scan then in that case. That's fine. It won't hurt my feelings. You can do that. You can sort these by any of the columns or any other columns you want to add on there. That's fine. Maybe you add an earnings date or something, sort it. That's fine. But the thing is, if you're newer to Thinkorswim and you aren't familiar with it, and you're clicking on yours and it's not bringing it up over here, it's because they're not linked. Look, I have an orange 7 right here. You can do whatever color you want, whatever color combination you want there. When you first look at it, it may look unlinked. You just click on it. You just change it, click it, maroon, maroon, orange, orange. Doesn't matter what you have. As long as they're the same, when you click on them, it brings it up. And it's not just that, by the way. Let me shrink this down a little bit. If you then go to the trade tab, if it's linked, which I have it linked, it automatically brings up whatever I was looking at there. Or the analyze tab, if it's linked, it'll automatically bring it up. That's how it works. Okay, so that's how the linking works, and it makes it real easy to look through. But what do we say? Well, we said this scan, we're looking for stocks that are above the 20-day moving average. Okay, I have that in red here on this chart. Okay, that's the 20-day moving average. I want something that's kind of trending up. It's gone up at least, 4%, I think we said, over the past month, essentially. Yeah, there we go. You can see that. I want the MACD histogram going up. This is where I said you could substitute that RSI in there on that. Well, is that going up? Yeah, if you look closely, it was going down. That's the red. But this last red color is less low than the previous red colored thing. So it doesn't have to be green. I just want it to be sloping upward. Okay? Sloping upward. So let's do this. Let's go. Let me just zoom in so maybe you can see it a little bit better. There we go. Okay? You see that? Maybe you can see that a little bit better. There you go. There you go. Okay? Those are sloping upward. Okay, let me go back here. Let me go back and just click on that. Zoom that out. Oh, by the way, there's a survey link in the chat. We always appreciate your feedback, everybody. And if you have, things you want to cover in a class, type them in the survey. I can't absolutely guarantee I'm going to get to everything, particularly if it doesn't have it, if it's not on the topic, relevant to the topic here of these kind of more advanced options, but I try and hit most of them. I do hit most of them. So feel free to give us your feedback there. So let's look at the results here. Okay, so we got Conoco. Now, anytime you run a scan, I don't care if you're running bullish scan, bearish scan, neutral scan, whatever, anytime you're running the results, you're not going to like all the results probably. The goal is to weed it out. You know what? This is an analogy. If you've heard me before, you're probably sick of hearing it, but if you're looking for a new house, you want to narrow it down. You don't want to go look through 100 houses in the area to try and find the one that fits your needs. You also probably want more than one result too. You want to compare a little bit. Okay. So the right number of stocks, I don't know the right number of stocks, but it's not 100 probably, and it's not one. It's probably not 50. It's probably, somewhere between 3 and a dozen or so stocks maybe. Makes it easy enough to look through. All right. So that seems kind of bullish, right? What are we going to do? We're going to look for, well, we got a trend. Probably support level here. I'd probably call the 20-day moving average a support level. We know on all these, it should be above the 20-day moving average. That's going to be a support level, okay? And it kind of consolidated, we'd say, and bounced up. We got that upward momentum. Even if you don't have the MACD, you can see it's bouncing up. Yeah, that's a possibility, right? Well, let's go through. Let's look through some others. CVS, yeah, this one really isn't trending that strongly. We do have some bullishness to it. Maybe a little resistance here that we're kind of right. I don't know if that's a break or not. Maybe not. Maybe we'd wait a little bit more on that one, perhaps. EQT, a nice trend. Nice little bounce up, upward momentum. Fair enough. Coke. Clicked on the wrong thing. Coke. Nice trend, upward momentum, above the 20-day. Netflix just had earnings. No, not earnings, but they just had that announcement with Paramount. And so, market's reacting kindly to it. Trend's not going up, but it just, that's one of those results. Here's another one. Trend's up, nice little bounce. Little flag pattern maybe? Yeah. Little flag pattern on Pfizer? Yeah. Procter & Gamble? Yeah. Let's look at it. Let's look at some trades here. Some example trades using this. Now, when I say a flag pattern, what I mean is this. Stock is trending up. It goes up, and it kind of pulls back like that. Okay? Goes up, kind of pulls back like this. Okay? Goes up, little pullback. Goes up, little pullback, up, pullback. See that? If you were just to kind of zoom in right here, could you kind of envision how that maybe look like kind of a flag, kind of like that? So, tipping over just a little bit, that's kind of that's a flag pattern. That's a bullish pattern in this case. There's bear flags if the stock's trending down, but in this case, I've got the trend, I've got the momentum, I'd consider this kind of a support level, support bounce here. No resistance here on the 6 month at least. Let's do a trade here on this. Okay. And so this class is, more of an advanced options class. Look, does this need to be an option trade? No, you can do stock trade. Could you just do a long call? Yeah, you could just do a long call. That's certainly a possibility. That's a reasonable trade. It's a little bit, we try and go beyond just long calls or long puts in this webcast here. So I'm not going to do that, but this search that we did, the scan that we did, can be used for a lot of different types of trades here. Let's go to let's do this. Let me go and I'm going to just kind of do a butterfly spread here, but I'm going to skew it more bullish, okay? Skew it more bullish. So I'm going to go out. I'll go out about 3 weeks. Now, my expiration date is going to depend on how long I want to try and forecast out for. If I think this is going to be going up for, a couple days, I may not go out as long. I'm going to go out about 3 weeks. We're not planning on holding it the full 3 weeks, but we'll do that. And let's do like, I'm just going to change this to butterfly. And I'm going to go a little bit above where we're at about 166.5 or so. I'm just going to go a little bit above here. We're just going to click on that. Okay. Now, when I look at this, this is what it's going to look like. Hold on. Let me analyze this. I'm going to go to risk profile. And we're just going to look at this. And you're kind of going, well, this is kind of bullish. Okay. Kind of bullish. Here's the current stock price right here. We want it to go up a little bit. That's not super bullish. It's not a real high probability trade. This is a kind of a pretty narrow window here we're looking at. But we can tweak it too. We can tweak it. We can make it more bullish. Let me get rid of my little drawing tool, bring this up and look at our trade. Let me get rid of that left-hand column. We'll go back to that left-hand column in just a little bit. But if I want to make this a little more bullish, what I can do is I can just kind of do this maybe. Let me unlink that. There we go. Is that looking a little more bullish? Again, here's the current stock price right there. That way, if the stock goes up, there's really it doesn't turn into a bad scenario. I mean, this was a pretty bullish chart with a pretty bullish flag. We want the stock to go up. If the stock stays where it's at, we're in okay shape. If the stock goes down, we're okay for a little bit. If it goes down a lot, we're not so good. But hey, that's what you got to do. When you're trading, you pick a direction here. Does this match? Does this match what the chart says here? Well, here's our chart. I think if we kind of do a flag target, what do I mean by a flag target? What I mean is this. In the past, last time, this was the flag pole. Okay, that went from what, about 156 or so to about 165, better part of $10 move up. So if I think this is going to move up from its low of 164, a better part of $10 up is going to be like 173, 174. That seems like, does this fit? 173, 174? Let me go back. Stock went up here. Yeah, I mean, that'd be okay. That we could even shift this up a little more if we wanted to make it more bullish. How do I do that? Well, I could say I'm just going to shift everything up by, say, 250. Okay? So let me go to 172.50, 170, 165. And now we're going to look at this. Here's the current price right there. Okay? Here's the current price. And there we go. We just shifted it more bullish. I don't care which one if you want to practice paper trade one of these, that's great. But what you got to do is just decide on your forecast. This is a more bullish variation, the one we just looked at, where every strike price was down $2.50. That's a little bit of a lesser strike price there. Okay. So, question in the chat. I'm new to condors, calendars, and butterflies. Where do I learn about them? Here. Here's a link to the playlist for this class. If you look at the playlist in this webcast, if you go back over the past couple months, I have a series just labeled number 1, blah, blah, blah. Number 2, such and such, right? And it goes through. Here's butterfly spreads. Here's condors. Here's calendars. one at a time. They're clearly labeled. Just look at the playlist. And if you're watching on a recording, if you're on the Trader Talks channel, it's simple. First of all, make sure you subscribe to the Trader Talks channel. Secondly, go to the channel, look at the channel. If you guys aren't, maybe, some of you are very familiar with YouTube, so forgive me for the next 20 seconds here. If you're not familiar with YouTube, going to a channel such as the Trader Talks channel is kind of a key way of finding information that you find of interest. It'll have little links. It'll have like videos, live, it'll say playlists. Click on playlists and you'll see everything, the different stocks on that playlist. Okay, so there you go. Let's continue. So here you go. There's the trade. That's the bullish trade. So let me just go, and I'm going to I'll do the more bullish variation of this trade. But if you wanted the more kind of neutral, slightly bullish variation of the trade, we just knock each of those down to 50. Let me go here. Let me tweak this. We were 165. This is going to be 172.50, and this was going to be 170. Okay. There we go. All right, and then I'm going to send, confirm and send. I'm going to put this in my butterflies playlist, not playlist, butterflies group. Click on send. All right, there we go. We got a sample trade on that. Now, how are we going to manage that? By the way, I teach a managing an options portfolio webcast. You can check out where we manage these quite often. But just suffice it to say, this is intended to be a bullish trade. If the trend breaks, it's no longer bullish. If we break through, and we probably have some support right here, this is where we identified support levels. If we break through support, we'll likely just kind of call it quits and get out of the trade, because this is a fairly bullish trade. And then as we get close to expiration, we're probably going to get out too. With a week to go, we'll probably look to get out. We're not going to hold it all the way to expiration. Remember, short options can be assigned early. Let's move to another one here. Okay. So let's just kind of go up. We had Pfizer, bullish. Well, I think, it's the trend is going up. So I think a lot of technicians would say the trend is going up. We kind of bounced off. Here's my support level I'm going to identify on this. Is this a significant resistance level? Probably not. That wouldn't deter a lot of traders, I think, from a trade. One bounce off that level. Because anytime a stock is going up, okay? Anytime a stock is going up, it's got to break through the previous high. If an upward trend is a series of higher highs and higher lows, how do you get higher highs? Only by breaking through prior highs. So a single high can't be that significant a resistance here. So I'm not that worried about that, if that's a concern of you. I'm going to call this an upward trend, a bullish trade. Now, the last example we did was a butterfly spread, a skewed butterfly. Let's do something that's maybe a little bit longer term that isn't, let's do maybe a synthetic here. How about that? How do we do a synthetic? A synthetic is supposed to kind of simulate the results of like a stock. It's not a stock, right? We have expiration dates. We don't get dividends, things like that. But we'll end up with something near a 1 delta, okay, or 100 delta, view it that way on that. So let's do this. Let's go here. So what's a synthetic? Let me get out of butterfly here. And I'm going to go out a little farther on this. Okay. Let's go to May. Now, typically with synthetics, what we're going to do in this webcast is we're going to find a strike price that is kind of at the money. Right now, we're almost in between two strikes, but I'm going to go to the one that we're closer to, 27. And I'm going to look at my calls. Here's my call prices. I'm going to look at my puts. The puts cost a little bit more than the calls. Typically, they're going to largely offset one another, the call price and the put price, but not entirely. Furthermore, one factor can be like implied volatilities. Here's your implied volatility. I'm just going to kind of circle them so you can see this. Here's your implied volatilities for the calls. Here's your implied volatilities. Let me try and circle the same ones for the puts. This is kind of interesting. This actually is not that common to have that big a difference. They're not going to be the exact same, hardly ever, right? But typically they're going to be relatively kind of more or less in line with one another. And I mean, they're not that far off, but if I just go with say the 27, 28 implied volatility, and 25 implied volatility, right? 30 implied volatility versus 26 implied volatility. There's a little skew. These are the calls are pricier than the puts right now. So it doesn't mean we can't do the trade. And you may look at the trade, and basically a synthetic is a long call and a short put. So if I do a long call and I do a short put at the same strike, I right-click on this. Let's analyze this trade. Let me move this over here a little bit. So that's what the profit-loss graph looks like. So I'm not going to take the time to do it, but if I did a stock, it would look pretty much the same. The higher the stock goes up, okay, this is the underlying stock price, $28, $29, so on. The higher the stock goes up, the more money you make. More money you make. The more the stock goes down, the more money you lose. One of the differences, I already mentioned a couple between a synthetic and buying the stock, is that this is more leverage. I mean, how much does this cost? Let me go back. What am I doing? We're going to trade tab. This is costing me $43 for 100 deltas. For 100 shares of stock, 100 deltas, it cost me $2,700 plus, $43. Okay. Now, you may go, oh, it's cheap. Great. I can make a whole bunch of money with just a tiny fraction of the initial cost. Great. You can also lose a whole bunch more money with with less money there. Leverage works both ways for you. But this would be an example of a trade where we're bullish. Make sure the chart fits your bullish posture here. We used our scan that we created for that I shared with you for that. And I went out, how far? I went out to May 15th, okay? So a few months here. This is more simulative of just buying the stock in that example in terms of, this is a trend trade. That butterfly spread we did, you're in and out in a couple weeks probably. This, hey, you got more, as long as this continues to trend up, we're sticking with it for a little while, okay? All right, let me hit up questions there. Is there a reason to call a butterfly than a put butterfly? Okay, this is from Harry. Call butterfly versus put butterfly. This is going back to the last trade. The call butterfly, there's not you do either is the first thing, okay? You could do either. That's the first thing. There is a reason, and that is, if you think about a butterfly spread, so we're going back to the last trade there. You have one long contract You have 2 short contracts in the middle, then you have another long contract. If you do the call butterfly and the stock is down here, which is what we did, a lower price, those calls are out of the money. Okay? The short calls are out of the money. Those are the ones that are more likely to get exercised, assigned early, I should say, assigned early. And so that is probably preferable than to doing a put butterfly if you're bullish and you think your anticipation is the stock's going to go up. Then those short puts are going to get more and more in the money, increasing the odds of early assignment. That's one thing. Okay. Also, if they're out of the money, they tend to have a little tighter bid-ask spreads than in the money ways. So that's the decision there on the call butterfly versus the put butterfly. Okay. Now, I'm just about out of time, folks. We did 2 bullish trades. I was going to actually look at another one, but I'm not going to, I'd have to rush too quickly on it. Here's another trade that I think I was considering looking, but we're not going to do it. I was going to look at COP, and I was going to look at this as a potential call diagonal spread. Okay, a long call diagonal. That's a bullish trade as well. Maybe you play with that in your paper money. Play around with it, see if that works. I'm hoping. So what did we do today? We talked about bullish trades. We talked about butterflies. We skewed it bullish because butterflies, if you're just doing a plain old vanilla butterfly, it's more neutral. We talked about doing a synthetic example trade. But how did we find these stocks? And briefly talked about that diagonal. How did we find it? We found it by just looking at the watch list. You got the watch list. You can tweak the watch list. It makes it easy. And the great thing is this watch list updates. Okay? It updates every day. I mean, it may not look entirely different tomorrow, but over time, this will update. This is what we call a dynamic watch list. So again, if you missed it at the beginning, I put the link to the scan in the description on this webcast. There's a survey link, everybody. We appreciate your feedback. Just click on that. Thank you, James, for helping me out in the chat. And thanks to each of you for joining me. A reminder, coming up next, we have market and sector analysis. And it's Friday, everybody. Have a wonderful weekend ahead. And we'll see you same time next week. Bye-bye, everybody.